How you doing? I'm Big D. So on Friday, June 12th, SpaceX is going to hit the stock market with the biggest IPO in history at a $1.77 trillion valuation. Now, some people believe that the SpaceX stock is overvalued considering it's not making money. It actually lost about $5 trillion last year alone. And you might be scratching your head wondering, well, who's going to buy this stock at a $1.7 trillion valuation when it's losing so many billions of dollars? Then the answer is you. Through your 401ks, your ETF, or certain index funds that you might already own, because SpaceX was able to bend certain rules to get added into certain 401ks, to get added into certain ETFs, and also added into certain index funds, which were otherwise it wouldn't have been able to do so. So in this video, I'm going to break down what's coming to the SpaceX IPO, how they might get added into some of your funds, and you might not even know it, and what this means for our economy and the stock market. So let me break this all down. 3 of the largest funds in people's 401ks and just general investment accounts include investing into the total stock market fund, the S&P 500, the NASDAQ 100 fund. Well, what SpaceX was able to do was work with certain of these big money managers to get added into the funds, even though it didn't meet the rules or criteria. Now let me start by talking about the S&P 500, because this is a little bit different. In order to enter into the S&P 500, it has to meet certain number of rules. Number 1, that company must have a market cap, meaning it must be worth at least 22, I believe, $billion. This meets that rule because it's 1.7 trillion. Number 2, the company must be profitable. SpaceX is not profitable. Number 3, at least 10% of the company shares must be traded publicly. That's not true for SpaceX. And number 4, the company has to have been public for at least 12 months. Also not true for SpaceX. So SpaceX did not meet 3 of the 4 criteria for the S&P 500. And this is where they tried to bend the rules for the S&P 500 and still get added into the S&P 500. But on June 4th, the S&P Dow Jones Index made a public announcement saying they're not going to bend the rules for SpaceX, and SpaceX is not going to get added to the S&P 500 funds. But it didn't work like that for the NASDAQ 100 and for the total stock market index. Let me break down what's happening over there. By the way, this is one of the reasons why on June 6th, you should be paying attention to what's going to happen, I believe, on Friday. When it comes to NASDAQ 100, so something like the QQQ ETF or like the total stock market, what SpaceX was able to do was get those rules bended because, well, they both also had certain restrictions and rules that wouldn't have allowed SpaceX to enter their funds to get SpaceX into it sooner. For the NASDAQ 100, SpaceX will get added into the funds in 15 trading days, meaning in the next few weeks. For the total stock market, something like VTI. Now, that is now going to add SpaceX into its 5 trading days, in just 5 trading days. What does that mean? There's a lot of ETFs out there. There's a lot of 401k investors out there and index funds out there that are invested into the NASDAQ, that are invested into a total stock market funds. Well, now more of your money is going to be going into SpaceX, even if you're not going out and buying the SpaceX stock. Why does that matter? Because the price of any stock or any asset depends on the supply and demand. And when you have more buyers than sellers, the price of stock goes up. When you have more sellers than buyers, the price of stock goes down. So for SpaceX to maintain any sort of high valuation, they need a lot of buyers. And even if you say, I don't want to buy a stock at this crazy valuation, that's not making that money. If you're investing in a fund that owns SpaceX, well, it doesn't matter. You're already buying into that stock. Even if you're not buying it individually, that's the key thing that you want to understand. But here's the part that a lot of people are missing. Let's do a bit of math to understand how much of SpaceX is going to go into your 401ks, into your ETFs, and into your index funds. Because this is a number that could be changing drastically over the next 12 months or so. The reason why is because SpaceX is going to be one of the largest companies on Earth, or already is at $1.77 trillion valuation. So you might think that because of its high valuation, it is going to make a major share of your funds. But that's not exactly true. Because when a fund like the S&P 500 or the NASDAQ or the stock market decides how much to invest in each stock, it doesn't just invest in that stock based off of its valuation. It invests in the stock based off of something called float adjustment weighting, meaning it's balance of the valuation of the stock. How much is the market cap plus how much of the stock is publicly traded? So SpaceX is planning to float, meaning list between 3 to 4%. If its company on the stock market when it goes IPO, so a very small amount compared to that to, say, Microsoft, where they're more than 99% of its stock is floating on the stock market. NVIDIA is right around 95%, Amazon 90%. But SpaceX, well, it's only 3 to 4%. So SpaceX is one of the largest companies on the planet, but it's only floating a small percentage of its company. Now, what that means is in the beginning, it's not going to be able to be huge shares of NASDAQ 100 or the total stock market funds, because only a small piece of that company is traded on the stock market. But the reason why SpaceX did that is very intentional. The reason is there's a lot of people that have been buying SpaceX stocks for the past number of years. Now, they got it in when it was cheap, not a $1 trillion company, but $1 billion company. As these insiders start to sell their shares in the coming months, well, that's more of a stock that is going to be traded publicly on the stock market, which means that float is going to grow month after month, year after year. And the idea is 12 months from now, there's going to be a lot more of SpaceX trading on the stock market. So if SpaceX opened up a huge float right now, meaning open up a lot of its shares on the stock market today, and then its insiders started to sell, well, there's a bigger chance that the stock is going to fall because now there's more shares trading out there. And if you don't have enough buyers for the stock at the higher of the valuation, well, you can start to see how that could cause the price of the stock to fall. So they're only listing a small percentage of its shares to hopefully gain, well, hopefully we don't know what's going to actually happen, but IPOs can often be a gamble, more often than not, in my opinion. So again, I am not telling you to run out and buy this. I am not someone who is a highly professional at this. I'm only bringing you some details that might help you in making your decision. So see my disclaimer in the description below. Now, I'll talk more about that in a minute, but the goal being to try to keep the stock price high, obviously. That way, even if insiders start to sell their shares in the coming months, because they often cannot do it in the first few months because the law says they say so. Now, that way, they can keep track that stock price is high. But as an insider starts to sell their shares, then it will start to make up a bigger and bigger piece of the different ETFs, index funds, and other things in your 401ks that it is invested in. So normally, it wouldn't be allowed to be invested in the NASDAQ 100 or the stock market this soon. But they were able to get these rules bended. That way, they could add it in very shortly after going public. But it's going to be a small piece of these funds to begin because of its small float. But as an insider, insiders start to sell their shares, it's going to make up a bigger and bigger weighting for these funds as well. But now let's talk about the IPO specifically, because IPOs are very weird and unique things. IPOs stand for initial public offering. It's when a company goes on the stock market for the first time. And this is the first time that regular people get to invest in the stock, right? And this is where a lot of people get kind of upset because how these rules work. And so when you often see happen is a lot of movement in the stock market and in the price, especially in the first day. But a lot of times, regular people don't get the actual participation in that early movement because you didn't invest in the stock before it was on the stock market. So let me explain. When Amazon went public in 1997 at $18 a share, they lost money for 7 years. Their stock actually fell by 95% during the dot-com bubble bursting. Amazon stock is one of the largest in the world. Tesla op-ed in 2010, I believe, they lost money for a decade until 2020. Now they're one of the largest companies in the world. Now the Uber op-ed in 2019, they lost billions of dollars a year for the first 4 years. And again, they're only one of the largest companies in the world. So just because the company is losing money during its IPO doesn't mean that it's doomed. And most likely, you need to plan for the long haul. It might be 10, 20 years. But it doesn't also mean that it's guaranteed to win. We've seen companies that came into the stock market with big hopes and dreams and then crashed and burned. Pets.com was an example of this. They went public during the dot bubble boom. They had a very high valuation, and then not too long later, they went bankrupt. So not every money-losing IPO becomes Amazon. But not everyone also becomes pets.com. Now remember, a lot of things about Elon Musk, the discussions that he's talking about robots and AI and the things that are going to change in a very, very short period of time could make this IPO one of the greatest in things happening for that company. I'm not telling you to run out and buy it, but it is a possibility that something that we've never seen could happen with this IPO. And the question is, where is SpaceX going to be? Well, we could take a look at history to see how IPOs have done in the past. Because between 1980 and 2020, those 40 years, the average IPO went up by around 18% in the first day. Now, you might hear that and say, wow, that sounds like an amazing opportunity. I should be buying more IPOs if they're going up by almost 20% in the first day. But not everybody gets to actually get that 20% boom, because there's a difference between the IPO price and then the opening trade price. The IPO price is what the insider, the early buyers, are selling their stocks at. The opening trade price is what a stock starts trading at. So if a company has an IPO price at $100, but then it trades at 120 as its first trade, you don't get to come in and buy at $100. You get to buy it at the first trade, which is 120. That's already a 20% jump in the price. But you didn't get to get in on that gain because it started trading at $120. This is what makes a lot of people upset, because if you don't get to the one of the insiders or the early buyers, you have to buy it after it hits the market. And after it hits the market, it might have already been the 20% jump. And now you're just trying to chase that run up. If there is going to be one at all, or you could lose. Remember, beware. And this is where we see a lot of volatility for the first few months, not just the first day, but for the first few months of any company that goes public. So what we know is that between 1980 and 2020, the average IPO went up by 18.4% in the first day. But let's take a look at what happened over the first year, the first 12 months. 64% of the IPOs underperformed the S&P 500 in the first year, because many of them now start to see reality, and they start the then release earning statements every quarter, meaning every 3 months. And that's what investors come in and say, you know what, maybe this is not so good of an investment. Maybe it's not worth as much, or maybe is it a good investment and people are missing out. This is why IPOs can be risky, and because of one, you don't have the full financial picture. Companies really start to release audit financial statements regularly after they go public on the stock market. And if I'm a private company, meaning I don't trade on the stock market like my company's brief finances, I don't have to publicize our financial statements anywhere. We don't have to go through the SEC regulations to do any financial audits and things like that. You have to do that if you're publicly traded and people are investing in your company and stock market. The other thing is, you don't know how other people are going to react to it, because at the end of the day, a company can make a lot of money, but its stock could suck if the investor doesn't want to buy into the stock. Remember what I said at the beginning of the video: a stock's price depends on supply and demand. You could have a great stock, but if your demand is not there, people are selling the stock price will fall. And this is the other part of the RPO that makes them so risky is people don't know what the stock market is going to say about that IPO, because there is a chance SpaceX goes public and investors say, I love Elon Musk. I'm willing to devote my entire 401k and my entire retirement to him and buy that stock, and the stock price will go up, and even more if it's a losing company. I mean, we've seen this happen with a lot of meme stock trading, where some companies that did not have the money or did not have the profit saw their stock prices rise just because people were buying the stock. So with SpaceX, there is a situation or a world where the stock prices boom because people are buying the stock because they love the idea of investing in SpaceX. Now there's another world where people say, this company is way too overvalued. I don't want to buy it. I don't believe in this company. And there's not enough buyers and the stock price tanks. It's a gamble. You don't know. Now there's a chance that either one could happen, but this is the part that people then try to bet on the IPOs if they believe that either the money is going to float and shoot the price, or it's not going to be. Then the price falls. Now that's what makes the IPO so risky, is that you don't know which direction it's going, because an investor, you want to invest in something for a long term. Don't go into this thinking that it's going to happen right away. I mean, anything can happen, right? But if you go in thinking you're going to be making money in the first year or so, it doesn't seem like a good opportunity, my opinion. Now, if you believe in it for the long term, if you believe the valuation is going to be 10 times, then sure, I understand what you're saying. But you got to understand, in this initial period, IPOs become a trading game where you're trying to trade and bet on what's going to happen in the early movement of the IPO. That's not investing. That's not the game for me, at least. That's why I don't really pay attention to many IPOs, because it's just a very different market for the first 30 days to the first 12 months. Because people are still trying to figure it out. They're trying to understand the finances. They're trying to understand public sentiment towards the stock. And that's something that only time will tell. And that's why you want to understand how this is going to play out. Now, I know that there's been a lot of concern about how this is going to impact 401ks and things like that. The key thing you want to understand is, don't worry. Things work out. As an investor, you want to focus on your long-term strategy. Now, I'm saying this specifically because I was hearing people talking about how they have 401ks with funds that are going to allow SpaceX to come in. And they're thinking, well, SpaceX is at this unreasonable valuation. The stock price is going to crash when the insiders start selling. And if the stock prices crash, my 401k is going to crash. So I should sell out of it. And that's why you want to, if that's what you want to do, then do it, But now I get in. I'm just a random guy here on YouTube. I'm not here to tell you what to invest, nor can I tell you what to do, because I'm not a financial advisor. But remember, as an investor, there's going to be a lot of short-term noise. There's going to be major IPOs. There's going to be more market crashes. There's going to be more stock market booms and stock crashes. It's just going to be bankruptcies. stock booms. There's part of the process. It's just the way it is. Your job as a long-term investor is to know what it is and what you're investing in, and invest in the long haul. It's not to try to it's not time to try to market if you're a little iffy and you're going to want to sell right away. If you start to tank, don't pull your money out because you're going to lose. You need to ride it out, because most likely, this seems to be most likely going to be a historical event. Again, my opinion. Now, you want to follow your strategy. And so if you are investing in long-term funds and you have years ahead of you, then always, buy. But what's happening with these little things here and there should not impact your investment decisions. You should not sell out of your 401ks because you're concerned about one stock that's going to enter your 401ks. Not to mention that SpaceX, even if you're invested in the NASDAQ 100 or the total stock market right now, it's going to be a very small share of your fund because of the float adjustment weighting that I've already talked about earlier. The other thing is going to be at least a year before it could enter the S&P 500. But a year from now, there's going to be a lot of changes with the SpaceX stock. It could boom. It could bust. We don't know where it's going to go. And what we do know is over the next 12 months, we're going to see a lot of reality hidden with the SpaceX stock. But over time, you're going to start to see the float adjustment waiting to start to rise. But reality will also be kicking in over the time when whether people actually believe it's worth the evaluation or not. So it takes a little experience to jump into something like this. So are there concerns and risks with investing in funds like the S&P 500, the NASDAQ, or the normal stock market? Absolutely. But the reason why they're so risky is if you're going to make a trade in these big, broad funds based off of a small micro event of a company going public, of one company going bankrupt or one company doing very well, if you start to invest in big, broad funds based off of one individual company, that's where it becomes very risky. But if you're willing to take out the emotion, take out the trading, and now you follow something like the ABB, always be buying every week, every 2 weeks, every month. You do this year after year and year after year, decade after decade. You don't stop just because of what one stock is doing. Well, now you have a recipe for wealth building, because here's the reality. If you take a look at the last 50 years, we've seen a lot of major IPOs. Some were more controversial. Some are more crazy. Some are more bubble-like, so to speak. Some were not valued high enough. But after you fast forward 30 days, 60 days, 90 days, that story becomes old. And then the next story comes in. Then there's always going to be the next thing that causes people to become greedy, cause people to become emotional, might panic and just go ahead and sell. And what you want to do is now make big macro decisions, meaning retirement decisions, 401k decisions, ETF decisions based off a small micro event. That's the big mistake that a lot of people make. And if you can understand that, well, now you have the ability to become wealthy, hopefully. And now you can build a more robust investment strategy. That's what investing for wealth is all about. Having a real investment strategy. Because right now, we're just talking about ETFs, and index funds and 401ks, which are all good. But then you can start thinking about how do I increase my returns? Because there are ways to increase your returns without taking on a whole lot of additional risks. Now, this is where your research and your strategy comes into play to invest your money into specific stocks or specific areas that are not just the big broad funds. Because remember, we're talking about a total stock market, or the S&P 500, which is a group of the 500 largest companies in the stock market, or the NASDAQ 100, which is a group of 100 largest companies in the stock market that are not financial, so primarily tech companies. It can get more niche into areas where you believe the money is moving, and this is how to, well, be dependent on, number one, your strategy, but also your research. Because the mistake a lot of people make is not that they start investing their money based off of what they see on Reddit or CNBC or Chad GTP, GPT, whatever you want to call it, without actually validating their ideas. And a lot of times, you know what, Chad GPT is just going to tell you whatever idea that you have and is good. You know, sometimes they just they kind of feel you out, and they want to tell you what's going to make you feel good, and jump right into it. It's just weird situation with AI right now. I don't agree with, but you have to know how to validate your ideas and how to do real research, because it's going to give you the information that sees on Reddit and any AI. They're just going to give you what they see out on the internet. Is it more truth? Is it more belief that, the information is out there? You're going to have to make that determination. You have to be able to know how to research yourself. This is one of the things that, putting in 2 + 2 together and you come up with 4, hopefully that's what you need to be doing. Because this IPO has been getting a lot of attention, and it's getting to the point where a lot of people are now questioning their 401ks. Even people that aren't very involved with finance, because of how much attention it is gathering, because people are scared it's going to crash their 401ks, especially if they're in retirement or going to retire. You need to make the best decision for yourself. And my opinion is, don't spend money that you are, you've already set aside for your living expenses, and making sure you have a decent life. If you have some expendable income, maybe that might be the money you want to use. But there's a lot of stuff that we do not know about SpaceX. I mean, how many times you start to think, wow, I didn't know that about SpaceX. They do what? And then you hear Elon talking about what's going to happen in just 2026 with AI and robots. Those two things right there make me believe that we aren't even in the tip of the iceberg yet. Well, I do appreciate you stopping in. Please like, share, subscribe. Help me get this channel moving. I'd like to get to 1,000 subscribers and the hours that I need. And it would be very much appreciated if you can leave a comment in the comment section. Try to have a great rest of your day. God bless.